Welcome everyone to this explainer. Today, we're diving headfirst into a massive, frankly historic shift happening right now in the financial world, the surging precious metals market. With economic uncertainty pushing everyday retirement savers toward hard assets, the landscape for buying and storing physical metals has completely transformed. We're going to break down the macroeconomic forces driving this trend and then do a deep dive review of a major player in this space, gold money, and its subsidiary, SchiffGold. Here's our quick roadmap for today. 1. The 2026 gold rush. 2. Gold IRAs versus direct ownership. 3. Reviewing gold money and SchiffGold. 4. Avoiding classic gold scams. 5. Top competitors in 2026. And 6. Making your investment strategy. Let's get right into it.
Section 1. The 2026 Gold Rush.
Okay, $3,500. That number is just staggering, isn't it? In 2026, gold surged right past $3,500 an ounce, hitting unprecedented all-time highs. To put that into perspective, just a few years ago, that price would have sounded like pure science fiction. But this isn't just some minor market blip. This represents a massive, fundamental repositioning by global investors, central banks, and everyday retirement savers who are desperately seeking a tangible anchor for their portfolios.
So, why the huge shift? Well, investors are essentially looking for a safe harbor right now. They're reacting to persistent inflation and some very real concerns about long-term currency strength. When you combine that with the choppy, unpredictable performance we're seeing in traditional stocks and bonds, it makes total sense that gold is cementing its status as a multi-decade store of value. Plus, technology has evolved. There are now incredibly easy digital pathways to actually buy and manage these physical metals completely outside the conventional banking system. Section 2. Gold IRAs versus direct ownership. You essentially have two distinct paths for holding these assets. On one side, you've got the gold IRA. This offers incredible tax advantages for your retirement, but you do have to use an IRS-approved custodian and store the metals in an approved depository. On the flip side, direct ownership is all about absolute flexibility. You get immediate, hands-on possession, no retirement account restrictions, and you handle the storage yourself. In practice, a lot of the smartest investors actually blend the two, securing long-term wealth in an IRA while keeping some physical metals close at hand.
Section 3. Reviewing gold money and SchiffGold.
The evolution of this company is a really fascinating story. Renowned economist Peter Schiff founded it back in 2010 as Euro-Pacific Precious Metals, specifically to give folks a trustworthy alternative to dealers pushing overpriced collectibles. They rebranded to SchiffGold in 2014, and then a huge milestone happened in 2016. They were acquired by Gold Money, Inc., a massive tech giant safeguarding nearly $3 billion in assets. By 2019, they launched a physical redemption portal, meaning clients could seamlessly turn digital holdings into physical coins and bars shipped right to their front doors.
Now, when it comes to actually making a transaction, SchiffGold takes a pretty unique approach. You won't find a standard automated online checkout cart here. Instead, they use a high-touch broker model where you engage directly with a dedicated specialist to lock in a live, time-stamped market quote. Why do it this way? Because precious metals markets move incredibly fast. This guarantees absolute pricing accuracy and transparency before you pay via wire, check, or even crypto. It's designed to completely protect the investor from hidden spreads.
And check this out, they have a really brilliant feature called the trade price. Retail investors always pay a slight premium to acquire physical metal, right? So if you try to use it for real-world bartering at pure spot price, you instantly lose money. SchiffGold fixes this by pegging the barter value of gold at spot price plus 15% and silver at spot price plus 20%. This means you don't lose that initial premium when spending fractional coins at a participating business. It's a fantastic effort to make sound money actually function in our local economies.
Section 4. Avoiding classic gold scams.
Listen up, because this is the absolute biggest trap you must avoid: numismatic coins. Shady dealers love to use a classic bait and switch. They'll advertise cheap bullion, but when they get you on the phone, they steer you into buying quote-unquote collectible or rare proof coins. The problem? They carry massive markups, literally 20 to 100% over the actual value of the gold or silver inside them. And when you try to sell them back, the liquidity just isn't there, and you take a huge loss.
SchiffGold actually calls this out directly in their Classic Gold Scams report, stating, "These companies take unfair advantage by selling products that are poor investments, often containing very little gold or silver. That perfectly highlights their strict, non-negotiable policy. They flat out refuse to sell numismatics. They only sell highly liquid, sovereign-minted bullion, so your investment value stays as close to the actual spot price as possible.
Section 5. Top competitors in 2026.
To give you a well-rounded perspective, let's look at the broader landscape. Your choice of provider really comes down to your available capital. Augusta Precious Metals takes the best overall spot with phenomenal education, but they do require a $50,000 minimum. If you're looking to do a 401k rollover, Goldco is an absolute powerhouse with a $25,000 minimum. And if you're just starting out, American Hartford Gold is incredibly accessible with a $10,000 minimum and super fast setup times.
Section 6. Making your investment strategy. So, how do we put all this together into a solid plan? When you're choosing a partner, you want to ruthlessly evaluate them against these 4 things. First, demand total fee transparency, no hidden markups. Second, make sure they offer a wide variety of purely physical bullion. Third, review their depository storage partners and insist on a reliable written buyback program. And finally, ensure they have proven expertise in executing clean, IRS-compliant IRA rollovers.
I want you to really ask yourself this right now. What does your portfolio actually need? Are you primarily looking for the incredible tax advantages and long-term security of a gold IRA rollover? Or does the absolute control and immediate accessibility of direct physical ownership better help you sleep at night? Figuring that out is step 1.
Now, taking that next step doesn't have to be intimidating at all. To help you confidently make your decision, dive deeper into the strategies we covered, and totally avoid those classic scams, we've got a fantastic resource for you. Simply click the link in the description below right now to get your completely free comprehensive Gold IRA guide. It's packed with everything you need to navigate this landscape safely. Because as fiat currencies continue to be tested globally, you really have to wonder, is the biggest risk investing in gold, or is it not having any at all? Thanks so much for joining me on this explainer. Stay informed out there, and I'll see you in the next one.